esteemed guests, it's a great pleasure to welcome you all, both to the Leveraging Fintech for Inclusive and Stable Financial System Conference and to Istanbul. First of all, I would like to present my thanks to Toronto Center for joining us to organize such an important event. Dear participants, the advancement of information technologies, global spread of mobile devices, and enhancements in cryptography all provoke a transformation in financial services. The term fintech, which refers to the innovative business models and technologies aiming at more efficient and more accessible financial services, is a symbol of this significant transformation. Fintech refers to a number of different technologies, including cloud computing, distributed ledger technology, artificial intelligence, big data, application program interfaces, and, of course, mobile telecommunications. These technologies can be combined in different ways to create a new and exciting products and services. We have already been witnessing the transformative power of these technologies nearly in all financial services that include making and receiving payments, including across borders, savings, borrowings, managing risks to income, savings and transactions, and at the same time making advices on all of these. Above mentioned new technologies are making the provision of financial services cheaper, faster, more efficient and available to all, including those previously excluded from the formal financial sector. Technology allows data to be captured and processed in real time and in huge volumes, creating enormous potential benefits to general economy, businesses, consumers, and to regulators by fundamentally changing how the business is done, how financial services are provided, and how the consumers make use of these services in the new digital economy. Fintech facilitates the cashless economy by reducing the use of cash and improving efficiency. In the field of payments, for example, mobile payments have matured to a point where they are widely used by the population. This allows economies to leapfrog from cash-based to less cash societies. Besides, innovations in payments boost higher competition and creativity, helps strengthen the monetary policy transmission by enhancing the financial inclusion. In other words, supported by the advances in mobile and internet technologies, fintech also enhances the efficiency and accessibility of financial services by lowering costs and consequently supports financial inclusion efforts. Fintech may also help all types of businesses through improved payments, new lending schemes, effective risk and customer relationship management arrangements. Fintech improves customer experience and efficiency by allowing users to conduct transactions through their mobile devices. Regulators, policymakers, and supervisory institutions also benefit from fintech. In the aftermath of global financial crisis, financial regulation has been tightening with the massive amounts of regulations hitting the financial services industry. Therefore, regulatory technology, RegTech, which helps financial institutions remain compliant through digitalization of data and processes to prevent non-compliance, improve risk management policies, and reduce compliance costs, has become a very popular subject. RegTech could provide great efficiency gains to financial institutions by facilitating a profound transition from a know your customer to a know your data approach, which is ensured by using efficient and effective processes for the collection, management, and analysis of reported data. As a similar concept, supervisory technology, subtech, on the other hand, can be defined as the use of innovative technology by policymakers to support supervisory processes. It helps supervisory agencies to digitize reporting and regulatory processes, resulting in more efficient and proactive monitoring of risk and compliance at financial institutions. Subtech could enhance real-time monitoring, which offers a wide array of benefits, including preventing financial crimes and non-compliance issues. Subtech has the potential to decrease the need of on-site audits. That is, the audits could be done remotely, reducing compliance costs to the supervisor and increasing frequency and engagement between supervisors and institutions. It can also harbor great opportunities for supervisors to collect and analyze big data, which refers huge amounts of structured or unstructured data from various sources. Together with artificial intelligence, AI, the use of big data, this concept allows savings in time and effort when conducting supervisory tasks. Given its benefits, fintech phenomenon also carries certain risk factors. These risks, in their nature, severity and immediacy, they vary. They also vary in technologies and business models. The emergence of new financial services outside the existing regulatory and supervisory parameters may impose new risks. The increased speed and volume of financial operations may cause instability and volatility if necessary measures are not taken. Risks arising from the new fintech products, such as crypto assets and new unregulated intermediaries, may have implications for financial stability. The new financial technologies rely heavily on internet and mobile devices. The elevated usage and interconnectedness of the financial services increase the continuum of cyber risks and hence the concerns about data privacy yielding to immense negative implications. One additional remark associated with the risks should be related to the market structure. The present regulations and oversight activities should be adopted by ensuring a delicate balance between fostering innovations and avoiding risks without creating unfair competition between new players and the incumbents. Dear guests, it is the responsibility of the policymakers to redesign regulatory and legal frameworks to mitigate these risks without undermining fintech's potential. Fintech has the potential to affect the safety, soundness, and resilience of the financial system and monetary policy transmission. By having faster and more efficient payment systems and capital allocation, fintech may boost banks' returns and therefore soundness. Fintech is encouraging more diverse business models and alternative providers, supporting competition and enhancing financial resilience. It also helps strengthen the monetary policy transmission by enhancing the financial inclusion and participation in the markets. On the other hand, fintech is already encouraging new entrants, including payment services providers, peer-to-peer lenders, robo-advisors, innovative trading platforms, and new foreign exchange agents. This could, with time, unbundle traditional banking models and deteriorate banks' capacity for economies of scale and eventually lower returns to banking intermediation, affecting the financial stability. Esteemed guests, I would like to take this opportunity to briefly mention about the implications of fintech for Turkey, especially about the studies conducted in the Central Bank of Turkey to integrate fintech to our policy toolkit. Fintech is a relatively new and promising concept for the Turkish economy and financial markets. Turkey has a great potential to benefit from fintech thanks to the advanced technological infrastructure in the financial sector, demographic structure, high internet and smartphone penetration. In Turkey, we witness that fintech investments and innovations are generally led by the commercial banks, which have a great share in the financial sector. However, fintech environment has already been flourishing with more than 200 fintech companies, majority of which operate in payments area. The most important step for the regulatory framework in the payments area has been taken back in the year 2013 with the enactment of the Law on Payment and Securities Settlement Systems, Payment Services, and Electronic Money Institutions. According to the law, payment and securities settlement systems operators are licensed by the central bank, and non-bank payment service providers are licensed and supervised by the Banking Regulation and Supervision Agency. Thanks to the new law and secondary regulations, today there is higher competition and equity in the payments industry. Central Bank of Turkey closely monitors and analyzes the global and national developments related to innovative financial technologies, big data, crypto assets, digital currencies, and DLT, conducts studies to better understand the opportunities, risks, and regulatory needs and cooperates with other national and international authorities. In this context, we actively contribute to the international studies conducted by the CPMI, FSB, and G20. CBRT and relevant authorities in the financial sector have established a working group to enhance cooperation and information sharing. The working group initially concentrated on the crypto assets and DLT. This year, it evolved to a Fintech standing working group which reports to the Financial Stability and Development Committee. The mandate of the working group includes investigating the potential benefits, risks, and effects of Fintech and proposing actions for safe and effective development of financial technologies. Recent time also marks concrete steps towards integrating Fintech tools to the institutional analytical capacity of Central Bank of Turkey in terms of monitoring developments in price and financial stability. One example of this effort is the Digital Price Index project. Currently, we are developing and utilizing highly sophisticated tools to monitor inflation. In our ongoing project, we are collecting more than 2 million prices from online stores and websites on a daily basis. In this context, we are employing this big data platform as a base for various advanced analytics methods, such as machine learning, sentiment analysis, in addition to generating price indices at the most detailed level. As an integral component of the concept of Fintech, implementation of such big data methods enables us to further grasp the inflation dynamics, pricing behavior, and occurrence of shocks in a timely manner. In line with our policy objectives, analytical methods combined with Fintech tools are also applied to monitor financial stability. Starting from recent period, we are constructing a detailed database regarding the effects on balance sheet and off-balance sheet items of non-financial firms, which are carrying a significant portion of total real sector FX debt in Turkey. This systemic risk data monitoring system serves as a platform to periodically assess the FX mismatch in terms of firms' assets and liabilities, as well as the hedging tendencies through the positions taken in derivative instruments. While it is still in the development phase, initial structure of database allows us to monitor the motion of FX risk in detail with sectoral and currency decomposition. Dear participants, I would like to underline that Fintech has a great potential to promote financial stability and welfare of the society by providing better financial services to businesses, households, and supervisory authorities. Recognizing the potential benefits and associated risks, all the stakeholders, including the relevant authorities, should monitor the developments in Fintech closely and work in cooperation to respond to these developments effectively and appropriately. I strongly believe that this event, which gathers several distinguished speakers and participants from the financial, academic, industrial, and regulatory circles, will contribute to the existing efforts and studies for improving the cooperation, especially at the international level, among the stakeholders, and also support the efforts to establish an effective and efficient Fintech ecosystem. In upcoming sessions, several aspects of Fintech will be discussed. Among these, potential contribution of Fintech tools to promote and sustain financial inclusion will be covered. Furthermore, the ways with which Fintech can facilitate more efficient methods to monitor and analyze financial stability will be expressed. Following sessions will also touch upon the interaction between regulatory practices and Fintech ecosystem. Implications of big data methodologies and the involvement of payment systems under the impact of Fintech will also be parts of today's agenda. Lastly, please let me take the opportunity to express my sincere appreciation to all parties who take part in the preparation phase of this valuable conference, and wish you all fruitful discussions throughout today. Thank you.
Thank you for your valuable speech, Governor Çetinkaya. It is now my pleasure to invite to the floor Mr. Babek Abbaszadeh, the CEO of Toronto Centre, to make his speech.
Thank Thank you very much. That was a great speech, Governor. I'm not sure what to do from now, so thanks a lot. So, Governor, Deputy Governors, distinguished guests, Toronto Centre is honored to partner with the Central Bank of the Republic of Turkey in organizing this timely and important event, especially in the wonderful city of Istanbul with such an amazing history. A city that Vikings used to come, is a bridge between East and West. And you know, the topic was very interesting, and the speakers that we attracted are very high caliber, but I'm sure the fact that it was being held in Istanbul had something to do with them wanting to come. 2018 is the year in which Toronto Centre is celebrating its 20th anniversary. Since our inception in 1998, we have trained more than 10,000 financial sector regulators and supervisors from 190 countries and territories, covering banking, insurance, pensions, capital markets, microfinance, and micro-insurance sectors. For those of you who may not know, the new chair of the Toronto Centre is Governor Stefan Ingves of the Central Bank of Sweden, who's also the chair of the Basel Committee on Banking Supervision. I'm sure that by now everyone in this room has become aware of the enormous potential that Fintech has in promoting financial inclusion. The governor touched on a lot of those, so it makes my task easier. In fact, governments in many countries are developing national financial inclusion strategies to take advantage of this potential. Their goals include to provide financial services to those who are currently excluded, to enable small and medium-sized firms to become more profitable, to expand and to create more jobs, to reduce poverty and inequality, to achieve higher rates of sustainable economic growth and development. But it's also important as supervisors be adequately equipped to deal with this challenge. So I'm very honored to bring to you a message from the Queen. Sorry, Sir John, I'm not talking about Elizabeth. This is Queen Maxima of Holland, who is the UN Secretary General Special Advocate for Inclusive Finance for Development and honorary patron of the G20's Global Partnership for Financial Inclusion. Her Majesty writes, technology-led innovations are creating new solutions for customers with financial services designed around their needs, which can help them improve their lives. As the UN Special Advocate for Inclusive Finance, I'm very pleased that the Toronto Centre is bringing together regulators and supervisors, development partners, and global standard setters to share experiences of how FinTech can play a transformative role driving financial inclusion while maintaining financial stability. This type of dialogue is needed to share the experiences of regulators who have implemented new policy initiatives to unleash innovation while mitigating potential risks. Going forward, it will be important for partners such as Toronto Centre to offer capacity building support to regulators and supervisors, so their staff are familiar with new technologies and they can incorporate innovation into existing supervisory tools and design new regulatory initiatives. We couldn't agree more, and we very much appreciate her kind comments. It is also easy to get lost in the technical dimensions of our conference, which is very important, but the Queen's message also points out the daunting challenge of the social dimensions of what we're talking about. More than 2 billion people around the world do not have access to financial services. More than half of these are women who live primarily in emerging markets and developing countries. We believe that inclusive financial systems are a powerful instrument for women's empowerment and that FinTech can be a key to unlock this potential. Women's ability to save, borrow, and control their own money and to insure themselves and their assets reduces poverty and promotes inclusive growth. Innovations such as digital finance expand financial services to poor and rural women. In addition to our wide range of financial stability, crisis preparedness, and risk-based supervision programs that many know Toronto Centre for, our programs in financial inclusion also help reduce gaps in women's usage of financial services by helping to put in place regulatory and supervisory frameworks that promote sustainable growth and enhance consumer protection. Traditional financial institutions, as well as new players, are creating new and improved products and services by leveraging a range of different technologies. These products and services can potentially be accessed and used by a much greater portion of the world's population. Our perspectives of unlocking fintech's potential is also aligned with Canada's new feminist international assistance policy and the foreign aid policy of the governments of Sweden and the IMF and others, and the UN Sustainable Development Goals as well. However, at the same time, financial authorities need to be on guard to ensure that financial stability is not somehow put at risk as a consequence of increasing financial inclusion, and indeed that financial innovations promotes inclusion rather than exclusion. In that respect, the growth of fintech raises many questions for financial authorities. For example, how can we ensure that much higher volume of data being collected about clients is secured and protected? How can we ensure that data and advanced analytics are not used to exclude specific types of customers? Will fintech cause the authorities to lose control over financial stability? And to what extent should new players be subject to regulation and supervision? The potential advantages of fintech are not limited to financial service providers and their clients. There is also significant potential for supervisors to leverage technology for their own purposes. Perhaps the biggest challenge financial authorities face is simply getting their hands around all that is going on, and that is not easy. It's easy to be overwhelmed. It is not only a challenge to keep up with what traditional financial institutions are doing, but it's an even greater challenge to learn from what the many new players, from global technology giants to startup firms, are doing. We've designed this conference to help you meet that challenge. Normally we hold these events in Washington, D.C., but it's good to be able to bring it to places that are accessible to a lot of people, and I'm very delighted to hear that about 23 countries are represented here. And having understood what is happening out there, supervisors and regulators need to assess the risks and decide how best to respond. So let me conclude by thanking our key sponsors, Global Affairs Canada, the Swedish International Development and Cooperation Agency, and the IMF, who have been steadfast supporters of Toronto Centre pretty much from day one. And we also count the World Bank Group and the Schulich School of Business in Toronto as our founders. So thank you. I hope you learned a lot and enjoy this conference.